Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and man, what a crazy time. Stimulus checks. We're not talking about billions of dollars anymore. Now it's trillions and multiple trillions of dollars, and not, 5% of GDP when it comes to money printing, but, 40% of GDP when it comes to what we saw last year and the craziness. And it's just everything seems to be going to the nth degree to contain what is seemingly normal. And really nothing is normal about what we're seeing. We're, deep, deep in the most historic bull run we've seen in stocks. Precious metals have been relatively disappointing when it comes to what we've seen in other markets. Bitcoin is going through the roof and not stopping. And that's another thing, when it comes to these markets, we have highs and then more highs and then more highs. And, there's small corrections, but, people aren't getting demoralized when they invest in stocks, but they buy gold. They buy when gold has some enthusiasm, and then it goes down and languishes, and you don't continue to see that new high after new high. And you got to just wonder the psychology of these markets and how long this can go on for. So that's why we have our next guest on the line, Karl Denninger. He's with market-ticker.org. He's a returning guest and someone who has been just spot on in his articulations of the markets and been following the markets now for years. If you want to get great analysis and great insight on what is going on in the markets, visit his website. Karl, thanks for coming on Crush the Street with me today.
Thank you very much for having me.
Well, I'd like to just start off here. Here we are in March of 2021, and I'd like to get your consolidated thoughts on what we've seen with COVID in 2020 leading up to now, and maybe some consolidated thoughts on the tyranny and just how this is impacting the markets as a whole.
Well, COVID, when you really get down to it, was and remains a fear porn exercise that's being driven by an awful lot of people. And unfortunately, the success of that fear porn has turned a huge percentage of our population, not just in the United States, but worldwide, into a cult. The intentional suppression of known strategies to interdict infections and keep them out of those who are most vulnerable. For example, locking everybody who works in a nursing home into that place of employment. If you work there, we're going to take one of these closed hotels because there's no tourism right now, and we're going to rent it, and you go to work and you go there. And those are the only two places you go. And then people say, well, you can't do that because there's no slavery in the United States. I say, well, yes, I can't make you do it. But what I can do is I say, look, normally you make $10 an hour. Today you make 100 grand a year. You make 100 grand a year for your inconvenience until this problem is resolved and we figure out how to deal with this. Well, if we'd done that, most of the 50% or thereabouts of the people who died from COVID that lived in nursing homes would still be alive. And that's just fact. And we knew this in February and March after Kirkland happened out in Washington State, when the infection got into there. And rather than do that and cut off the vector into those places, we instead have nurses and doctors doing TikTok dances and claiming to be heroes, and everybody has to think that they're wonderful and awesome. And yet, if you don't let any visitors into the nursing home, how'd the infection get into the nursing home? Obviously, it was from one of the people who works there. That's the only other possibility. We have had a cult of masks placed upon us. And yet, a couple of weeks ago, the CDC came out with their own study, which, by the way, is deeply flawed, and I could tear it into pieces, but I'll just take it as pled as being true. Okay. When you walk in, you say, this person robbed a bank. All right. I'll just accept that everything that they claimed is true. 2%. If we had not, with no masks whatsoever, the maximum impact on mortality in cases was 2% by their own study. So that means that by their own data, we would have had another 15,000 people who would have died. On top of the 500 and some thousand who did. And this, of course, assumes that you believe that all 500,000 that they claim died from COVID actually did. In the meantime, we have just to July, from the start of this until July, because that's the latest data I have data for right now, we had 13,000 overdoses, people who died from an OD. So we killed more people from overdoses by putting people out of work and basically creating despair than we possibly could have saved by everybody wearing masks. All right. And yet we have
the
this.
mask thing is just it's such a problem, right? I mean, I'm not going to argue that masks don't work in a hospital setting with doctors wearing gloves and sanitizing everything, and then that extra layer of protection over their face.
Oh, actually, they don't. No, actually, they don't work. Neil Orr proved it in 1981 that even in an operating room, they didn't work.
Yeah, I'm sure. I'm just saying. I know what you mean. I'm not trying to split hairs on that.
No, Kenneth. All I'm saying is the data is what it is. Okay, yeah. But what we've done is create a climate of fear where even your children believe that anyone they see on the street may kill them. Okay. This is not good for the economy. This is not good for commerce. This is not, yeah. And at the end of the day, what we're really talking about here on your show is how does this impact the economy? So what has the government done after inculcating all of this fear? And the answer is throw money at people. Okay. Yeah. Which by the way, is a horrible thing to do. And people say, you just heard the FOMC. Oh, well, there's no real inflation. It's only about 2%. And, when it picks up, maybe someday we'll have to raise rates. By the way, the cost of lumber, if you want to see something really scary, go look at the random board foot lumber futures market, a publicly traded commodity market. It is up by about 300% in the last year. It's come back in a little bit, but still more than a double. You wouldn't want to build a house, would you? What do you got to have to build a house? What do you have to?
I mean, and I'll interject right there. Why is that? Is that because of shortage of inventory and people building, higher prices, money printing? What do you feel are the factors that are contributing to that?
Well, it's inflation. I mean, how long does it take to grow trees, right? It's not something that happens in an afternoon. You can't just turn around and say, oh, by the way, I'd like to have more pine trees. That's not how it works. Okay. So, I mean, inflation is always and everywhere a monetary phenomenon. If you put more credit into the system, which is what the Federal Reserve does. And remember, the Federal Reserve is not actually responsible for this. They don't create that situation. Congress does. And Congress, in the Federal Reserve Act, set forth a requirement for stable prices. That's what the act actually says. It does not say 2% inflation. It says 0. Stable means unchanging, right? Well, guess what? That law has not been enforced for over 100 years. There has never been anybody on either side of the aisle that has called out Federal Reserve president or chair or anybody else for doing this. And now we have this idea that, oh, there's really no inflation in the market. Well, I got news for you. If you go try to build a house, you'll find all about inflation. You go to the gas station, you'll find all about inflation. And this is going to show up downstream in other things because it always does. The people that do this always like it when it shows up in house prices and stock prices. All right. And yet they give you this idea that if your house price goes up, that this is somehow good. It's actually not. Because if you think about it, how do you monetize that? Right? I mean, the whole point of investing and trading is to monetize your gains, right? I mean, numbers on a piece of paper don't mean anything. You have to spend them on something useful to you. And the problem is, okay, so I sell, my home here is probably appreciated in so-called value by 30% over the last year because of all the money printing. That's fantastic. I sell it. Now, where do I live?
Yeah. Well, the flip side to that is that you didn't own a home, and now you to move forward with your life, you got to buy 30% higher, and you weren't anchored in to the appreciation.
Right. So the people who don't currently own get screwed. The people who do currently own don't get helped. The only person who gets helped is your heirs if you die. Because then they sell your house so you don't need anymore. Yeah. Okay, but since you need
rich people, right? I mean, in a sense, people who own assets. If you own 20 homes that all went up, sure, you have the one that you lived in, but then 19 others that have gone up with it.
Well, but then what are you doing with the other 19? Probably renting them, right? And okay, so you rent them out. So what happens to the person who doesn't own one but has to rent it? he gets hosed. And then the other problem is, what is property taxes are typically based off value. So your property taxes go up. I mean, there is no free lunch, right? I mean, people get in this idea that there is.
Yeah.
The
You just don't want to fall behind, though. That's kind of my point with not owning something and then being on the sidelines for this and like, okay, well, now I want to have kids and have a life and not wait for, you know, the earth to turn into an ice ball. I mean, you got to do something, right?
well, all right. So what do you think has happened over the last 15 or 20 years in that regard?
Oh, I think people have gotten crushed. It's that
Well,
wedge that's been driven between the rich and the poor. The middle class has been getting hosed.
so one of the points that I made in a recent column is that where this has shown up is that intelligent men and women are not having children.
Hmm.
Now, what do you think is going to happen 20 years from now when you think your Social Security is going to be there?
Yeah. Oh, that's
Well, see, this is the problem with these kinds of policies, is that people only look at today. The stock market goes up. Hey, this is wonderful. All right, what happens tomorrow when Medicare collapses? And oh, by the way, I have a long-standing prediction, but that by 2024, game's up. That's not very far from now.
yeah. So, Karl, let's just address another potential, scenario here. You know, this war game that we're creating, game theory. So we've seen money printing to the nth degree. Do you see a time where they'll allow deleveraging to happen? You know, massive bankruptcies to take place. I mean, as it is, things should be happening. People aren't paying their rent; they're not paying their mortgage.
Right.
Businesses should be failing to a lot larger degree, but yet we have record asset prices because of that injection of capital. Do we see a situation where they stop doing that, or will they just inflate the current situation forever, so where there really will be no correction in asset prices? If you follow what I'm saying, and I know it's such a tough thing to try to anticipate and predict. We were talking about the financial crisis in 2008 prior to this, but this is not the same thing. It's playing out differently than it did back then. In March of last year, that was the fastest turnaround we've seen in stocks ever. That was
yeah, that's true. But there's a lot of people. There's some of the most fatal words, probably the most fatal phrase for people in the market is different this time. No,
sure. I know. I get
it
that.
Isn't. Yeah, no, it isn't.
But what they're doing is different, though, right? Would you agree that they're printing money to the degree that they're doing to a level, and therefore the fallout could be different? Like they've been able to control it, but maybe they won't be able to control it going forward.
Well, ultimately, they won't be able to control it. The question is always timing. That's always the difficult part when you're dealing with markets, with asset markets in particular. What I have said to people before is that the balance in the stock market and in all asset markets basically works the same way. 2 o'clock in the morning, some percentage of people wake up in a cold sweat because they're afraid of missing something that is happening, and they mash the buy button. And some other group of people wake up in a cold sweat and they're scared to death that they're going to end up bankrupt the next morning, and they mash the sell button. And as long as there is a reasonable balance between those two groups of people, nothing really horrible happens. But someday, if people wake up and there is nobody with a hard on for a profit tomorrow, and it's all on the other side, then you get what happened in 2008, and you get what happened in the early part 2000. If you remember the early part 2000, there's a lot of speculation as to what set it off. I actually saw it happen from a hotel room while I was house shopping in Florida at the time. But there was a pretty clean argument to be made that this little company that's still around called MicroStrategy was actually the reason it started. They had recently made an announcement, and then a few days later they came out and they said they had an accounting irregularity and we're going to restate earnings. And literally, like the day after that happened was when the crash initiated in the NASDAQ. And so, and yet today the company's still around. Now they claim to be a blockchain thing or whatever have you. But they were literally a nothing in terms of, this was not Cisco. This wasn't Lucent, which later both of them took a big header. Lucent blew up and went out of business ultimately. So, it wasn't MCI. I mean, all of that came later on. But that's the challenge, is that usually the triggering event that causes these things to go over center is some little thing out of the middle of nowhere. Nobody thinks is important and nobody's watching. I mean, you look at what's going on like with GameStop, with the crypto exchanges and things like this over the last year or so. And I see that sort of danger signal in there because that is historically the kind of thing that everyone says, oh, GameStop's just this little dog rat company that, I mean, let's face it, they turned into a pawn shop for used video cartridges, right? Because virtually all new game sales are online delivery now. So what is their going forward business model? Well, nobody knows. That's why their stock was in the ditch. Because, I mean, if you think about it, you buy a PlayStation or an Xbox, whatever, you don't buy cartridges anymore, discs.
They're Blockbuster.
Yeah, and now all of a sudden, they're Blockbuster basically, and now all of a sudden, whammo, here it comes. And and the same thing with many of these other firms that got caught up in this. I mean, Nokia was a great cell phone company years and years ago. They turned into a nothing, and then all of a sudden, whammo, their stock triples. And so this kind of pattern, though, is the sort of blow off that eventually somebody pushes the wrong button in the wrong place and this thing folds back. What I see as being a problem here right now is that you're seeing the long end of the curve get out of the Fed's control, the 10-year treasury, okay, for example. And yet they pulled this repression game after World War II, and they got away with it for 20 years. And then everybody remembers Jimmy Carter right? And what happened with inflation in the United States during that time. So the idea that you can do this indefinitely is wrong. It has never been true. It will not be true this time. The only question is how bad the collapse will be on the other side of it. And what I'm very concerned about is that the sort of money printing we've seen over the last year in particular I used to get cranked off about 4% structural deficits when you have real GDP expansion running at 1.5%, because what this says is that eventually the credit card you're not going to be able to pay the interest charges. Okay, essentially, it may take a very long time. Now we have the government turning around and putting 30% of GDP on the credit card, which is nuts. And the problem with that is, to correct it, you must take all of that spending back out without. And the tax collapse that comes from that loss of economic activity has to be absorbed too. So what are you going to do? Take 50% of the federal government, throw it in the bin? I mean, that's literally the sort of adjustment you're talking about. How does that happen without ending up with an Argentina or Venezuela kind of scenario?
So I guess to your point that this time is not different, what we have seen in the past is those have proven to all be corrections. What we saw in 2000, what we saw in 2008, what we saw in 2020, 2018.
How about 1929?
1920. I mean, so is a case to be made like, hey, you should never stop buying stocks?
Well, so historically speaking, metals and other commodities have proven to be a terrible inflation hedge. They have proven to be a very decent geopolitical instability hedge against wars. But if you look at the facts, you don't buy gold if you think inflation's coming. You buy the S&P 500. Because historically,
we have to acknowledge that. Now, I don't know if that's going to be the case here in the short term. You know what I mean?
Well, I don't either. I'm just saying that, historically, I mean, if I look at back from when you were actually able to privately own gold again, when Nixon shut all that down and gold traded as a commodity, was not barred from private ownership. If you look at the price appreciation in gold from that time versus the S&P price appreciation from that time, and the difference in money, the only way to outrun the inflation that has occurred has been to be in common stocks. And it doesn't matter whether you like it or not. That's what the data says. Now, will that continue to prove to be true? I have my doubts. And the biggest part of the reason is that back in the 1950s and 1960s and 1970s, most of what was in the S&P 500 were companies that had assets, hard assets, You had steel mills. There was a big building there. There was a foundry. There was a car plant. There were things that had real value here today. You go take a look at Amazon, for example, which is obviously one of the most successful in terms of stock price appreciation from their IPO forward. You look at their price, and then you take a look at, let's say that you took all of AWS, which is their fastest growing, their biggest moneymaker in terms of gross margin contribution. How much could you sell all the computers that they own in those data centers for as a percentage of what they paid for them 6 months ago? Maybe a nickel on the dollar. Okay, that's just the reality of computer equipment. I used to run an internet company. 2 years after I bought a bunch of CPUs and a bunch of router equipment, they were worth 20 cents. And that's not changed, right? If anything, that's accelerated as technology has improved. We've gone from hard drives to solid state disks to, I mean, this is just the nature of the business. And so most companies now are essentially asset less. They don't have any assets. All they have is cash flow. So Amazon ships a bunch of goods and a bunch of services to people and collects money. Okay, fine. What does Netflix actually physically, what is the actual physical asset that Netflix owns? And you say, well, they're intellectual property. Well, what intellectual property? Most of what people stream is not their stuff. It's someone else's. So what do they actually own? The cash flow from their customers. That's all. Right. I mean, and I look at that and I look at the valuations that these companies have. Places like CRM, same sort of deal, Salesforce. They have a piece of software. Okay, how much is that worth minus a customer? Zero. So I look at the panoply of businesses that are out there and the ones that are selling physical products. You look at Nike sells shoes. How does Nike make shoes? They use slave labor in China. What happens if that goes away for some reason? Okay. I mean, I look at what's the asset base underlying all of these firms. And what I see is it's essentially nothing. So the only value these firms actually have is the belief that someone will pay more for them tomorrow. That is fundamentally what common stock with no dividends. That's what common stock is. It doesn't have an asset value. If there was a liquidation, common stock would be worth zero. I mean, GM's when they went bankrupt the last time during the crash, their old stock was worth nothing. And why? Because they had enough debt that it was, once you paid it all off, you paid the bondholders, there was nothing left. And so I see trouble coming because the value of a stock without assets is to a large degree an inverse of interest rates. And if the Federal Reserve loses control of the long end of the curve and borrowing costs rise, and you've seen impairment of local and state government earning capacity because of what's happened with earnings and everything and employment with the pandemic and everything else, down the road, there is a warning sign here, but I don't know when it's going to happen. So, I mean, do you tell people to get the blankety blank away from it all right now? Well, probably not, because, I got out of everything after I sold my internet company in 1999, and I watched over the next 6 months, the NASDAQ doubled. Okay. And every one of my friends was laughing at me. What are you doing? Oh, look at how much I'm making on Cisco. Well, a year later, who was doing the laughing? Right. But that's the thing, is that and then the real danger is you go ahead and you bail on this. 6 months go by, you see, the S&P is trading at 5,000 instead of 4, right? And then you buy back in and then it crashes.
Yeah.
And now you're hosed because you started with that higher cost basis.
You're bringing up some of the most crucial things. And, it's hard for people. We don't have, decades to wait for things to play out. We're people. We got to live our lives. Millennials got to get married and have kids, and they got to buy houses. And, and I know you do the best you can, but it's such a nuanced, difficult thing, because this is our livelihood, and we're being forced to speculate. And it's almost as if you have to accept a certain amount of casualties. And I mean that on both sides, on the upside, losing on what you could have made. And then even on the downside, not being catching the perfect bottom or catching the perfect top. You kind of have to have that perfect balanced approach to stay in front of inflation, right? That's
Well,
the key, and to protect your wealth. Because the other issue for me is that I don't trust the US dollar with what we're seeing right now. I mean, historically, we can trust it. We if past is any prediction of the future, it seems like you can trust it. But man, what they're doing to it, it just seems so reckless. But maybe they print 100% of GDP in 2021.
well,
Maybe that
it's
does something to inflation. Maybe it doesn't. Who knows?
yeah. I think you got to be a little careful there. Back in '07, I was expecting the DX to trade at 40. Okay, the dollar index. It was about at 80 at the time, and I expected it to trade at 40. Well, obviously that didn't happen. I was wrong. Okay, and yet that was my base case expectation, which would be a 50% devaluation in your purchasing power, and over the space of a couple of years, the crash came in the stock market, but the dollar did not collapse. So I went back and I looked at why, because when you make a prediction like that and you're wrong to that sort of a degree, you better go figure out what you didn't get right. And so I went and I looked at it, and the bottom line is that the dollar, like all of the other major currencies of the world, are floating exchange rate things. And all of the central banks and all of the other governments essentially debased their currencies at an equal rate. And from a confidence perspective, people still chose to be in the dollar. And so there you are. Here we are today. We've seen, I'm looking at the screen right now. It's trade 91.71. Okay, which, I mean, given what's gone on over the last year, that's crazy. All right, the dollar would be trading at 70, but it's not. And here it is at 91.71. It's not down much from where it was a year ago. And why? Same reason, people would rather be there. Why hasn't gold skyrocketed? Well, because at the end of the day, if you have the sort of runaway inflation where the dollar gets destroyed, and you have a pile of gold coins and I have a chicken, how many of those coins is going to cost you all depends on how hungry you are. Because if you're hungry enough, the answer is all of them. Okay. And then I'm either going to kill you or you're going to kill me, because we don't think that's a fair deal, right? One of us is going to shoot the other. And oh, by the way, there aren't going to be any cops around to stop one of us from doing that either. So when you get into the kind of apocalyptic sort of scenarios that people like to put out there for why you ought to be in this or that, you have to realize that at the end of the day, if that happens, none of this means anything. Investing is for that sort of a situation you cannot do. You are going to end up in the bottom of a ditch somewhere. And the question is simply, are you the first guy or the last guy that goes in the ditch? Not, is it going to happen? The answer is yes. So I don't formulate any part of my life around that sort of situation, because if it occurs, there is no defense in the asset markets that you can find against that. There just isn't. Look at the people in Venezuela that used to be middle class. They're literally grubbing the streets right now. And the other thing you have to remember too is that for anyone who is not super wealthy, and there are probably some of your listeners who are, but most of them are not. I mean, that's just the reality of it, right? Is that most of us are not in that group. You cannot outrun a serious inflationary spike with investments. And if you think about the reason why, it's because all you can put into the market, all you can invest is some portion of what you earn. You need the rest to pay your power bill, to pay your taxes, to make your mortgage or your car payment, or whatever have you. You have to buy food. You cannot invest 100%. So if you were to come up with an investment that was a little better than inflation, which on average things won't be a lot better, you're still only able to protect what, 20%, 25%, 15% of your earnings. Well, that's not enough. You still fall behind by a huge amount. If you're the average person that can sock back 10% of your disposable income into investments, which is a very good goal to do that, by the way. If you're actually in a position to be able to do that, and a lot of people aren't, but if you are, you'd have to outperform by 10 times. You're never going to outperform. If you got 10% inflation, that means you need to double every single year. That's not going to happen. I mean, that kind of thing doesn't even happen in speculative crazes like Bitcoin.
I was just going to ask you, what are your thoughts on that? And I want you to tie it to the craziness that we are seeing. And I know you're not trying to make your investment plans on Bitcoin, on some sort of apocalyptic event, but we haven't had an apocalyptic event, and we've seen Bitcoin go and do what it's done. And a lot of people feel that with all the inflation and everything we've seen, we could see some sort of move like we've seen in Bitcoin in precious metals. What are your thoughts on that idea?
I highly doubt it. And frankly, I mean, Bitcoin is a purely speculative asset. It has nothing behind it. What
I
people
don't agree with that, but I'll let you
no,
say it. Which is
so
fine. I respect your
no,
opinion.
I understand that, I mean, there's difference of opinion on this. Okay. People say, well, the US dollar doesn't have anything behind it. That's not true. The US dollar does have a lot of things behind it. Specifically, it has your willingness to get up in the morning, work, and pay taxes, which is the entire reason the US dollar has value. That's the only reason it has value. It's the only reason any national currency has value. No national currency has value beyond what you can drag out of the ground and what you can tax from the citizens. And in order to do that, there has to be an economy that generates something in order to tax. If it collapses, so does the currency. And that has been the lesson throughout history when we've seen nations go down. You look at what happened with Weimar Germany. Okay. Everyone looks at the situation in Weimar Germany, which was generated by a huge amount of money printing. But what preceded the money printing was that the productive capacity of their economy was destroyed because it all got blown up in World War I. Okay. And so, I mean, we blew it up. They didn't have anything to tax. What were they left with? And essentially what it was printing up wheelbarrows of currency, and then the entire thing went down the toilet on them. Well, we're not in that sort of situation, but what I see as particularly dangerous is that in order for something to be a store of value, it has to be transmutable into something useful to you at some kind of stable price. And the reason is that you're just half the transaction. The person on the other side is the other half. Let's say that you decided today with Bitcoin at about 60,000 that you're going to buy a Tesla with that. Okay, so a Bitcoin for a moderately high-end Tesla. Okay, that seems like a reasonable exchange, right? But is it a reasonable exchange for Tesla? Well, that depends. What if the price tomorrow is 70,000? Then Tesla just left 10 grand on the table. All right, that's stupid for them to have done that. On the other hand, for you, it was smart, because why would you pay 70,000 for something you can pay 60,000, right? I mean, but the problem is you unbalance the economic system when this happens. And therefore, you've got a problem with trying to use that as a store of value, because there is somebody always on the other side of every transaction we enter into, whether it's for a chicken or a loaf of bread or whatever. And we both have to think the trade is fair or it doesn't happen. So,
but isn't that case for anything? I mean, as you're making the case that it's like unique to Bitcoin, but isn't that true for gold and silver and stocks and everything else?
Well, it is, which is why we transact in dollars. You don't transact in shares of IBM.
Sure. Well, and I think, again, not to get too,
but see, that's my point, is that we transact for our loaf of bread and our gallon of gasoline in dollars. And the reason we do that is because even though the value of dollars goes up and down, and in fact, if you look at it from 1913, it has gone one way over time, right? But it does so in a fairly predictable and narrow banded kind of way.
Yes.
And that means that when I give you dollars for a car, you have a reasonable expectation that in the time it takes for you to go get some more steel to make another car, that the value isn't going to go down in half or double. All right. And see, that's the thing, is that within the realm of the transaction, if I'm in business, after you transact with me, I have to go resupply either my goods or services in order to serve the next customer. And in between those two transactions, I have to have enough stability within the currency system to be able to do that. The lesson we've learned from nations that have collapsed, that have had their currencies collapse, like Venezuela, Argentina, Weimar Republic, Zimbabwe is another example, is that the social system, the entire societal system of reason breaks when that is lost. Because now if I'm a baker and you buy a loaf of bread from me, I can no longer go get some more flour and make another one with what you paid and have a reasonable belief that I'm going to be able to source the materials to make the next loaf for the next guy. That's when we lose the social systems that bind our economy and our people together. And then you end up with something like Beirut, and that's bad.
So wouldn't you agree, though, that that's the reason why we can't use gold as a currency? I mean, because of the fact that it moves so much, not in relation to Bitcoin, for instance, but it's the same point, but maybe it's not exactly supposed to be a fiat dollar replacement. It just has wealth storage properties of the network effect and the usability, transfer of wealth, wealth storage. I mean, all these things that, obviously people believe in it for, and that it doesn't need to be a perfect replacement for the US dollar for people to transact. And it's a
No, it doesn't. Right. And but see, that's true of anything that's considered an asset. Okay. I mean, the whole reason that I own stock in, say, for example, General Electric, is because I believe that there will be value to the stock tomorrow. If I don't believe that, then I'm crazy to be sitting on shares of stock in that company. Right? It's the same thing. I mean, if you own Bitcoin, the reason you own Bitcoin is you believe it will be worth something tomorrow.
Yes. You believe that it's still going to transfer funds. There's still going to be a network, all those things.
Yeah, you're still going to have value there. Same thing with gold. The reason you own, gold coins or bars is because you believe that tomorrow you will be able to exchange those bars for something of value. And at the point that faith is lost, then it all goes up in smoke. And I don't see what I see happening with the current bout of money printing that's going on in the United States is I think you're going to see a re-rating of any asset that is dependent upon the debt that is generated as a result. And this is going to hit things, including cryptocurrencies. And the reason is that in order for you to transact and to mine them, you must buy things and power them because the miners and the clearing agents have to have their systems operating in order for that to work. Well, guess what? That costs something and it has to be paid for. So as those expenses go up, value goes down. And that's true for common stocks. It's true and by the way, it's probably going to make gold and silver go down in price too. So for the same reason. All right. I mean, in an environment where it costs me more to finance the bulldozer and the mining equipment and the fuel to run them to get the gold out of the ground, well, at some point, I can't sell it for as much as it costs me to get the ounce.
Yeah, it's unsustainable to have troops getting free electricity mining Bitcoin, right? That's not exactly the business model.
Right. Well, but it's the same problem with oil. We have the same basic situation with petroleum, in that at high prices, all the fracking and other things that we do becomes profitable. At low prices, you're selling your oil for less than it costs you to get the barrel out of the ground. You will eventually go bankrupt if that continues. All right.
Exactly.
Yeah.
Karl, if people want to learn more about you, your website, what you do, your insight, I mean, my goodness, we had such a great conversation here. If anyone liked what we had to talk about and obviously what you had to say, if people want to learn more about you, where can they go and what can they expect to find?
So the site is market-ticker.org, not com, org. Been around since 2007. And there's a little of everything there. I do articles on the economy. Unfortunately, these days you're forced to deal with politics because everything is political, whether you like it or not. And so there's an awful lot of political stuff in there. There's been, over the last year, there's been a lot on COVID because that is essentially shaped most of the investing and economic landscape for the last year. And probably will for the next some period of time forward. I tend to cover in addition that the employment report in particular, I'm on with Stocks and Jocks first Friday of every month when the employment report comes out. I've been covering that for, oh, good Lord, more than 25 years now. It used to be one of the most important things I looked at when I was running a business. So, yeah.
So good. Karl, thank you so much for your time, your insight, and coming on the show, and being so generous with us. I really do
Anytime.
appreciate it. Yeah.
Anytime at all. Thanks. Hey, I love that, your little Crush the Street logo in the back. It's great.
Oh man, yeah, it's been my baby now for a number of years. So thanks so much.
It's nice.